And joining us now as our guest host for the next hour or so is Jim Rogers, chairman at Rogers Holdings. Well, great to see you. So your take on what the Chinese did. Certainly, we had really divergent moves. Some saying it was a votive conference with the Chinese government that they are on the growth track, while others saying maybe are they on a tightening cycle that is just getting started.
Well, raising interest rates is good anywhere in the world here in 2010, the end of 2010, because we have more inflation ahead of us and it's going to get worse. However, it just attracts more money into China, which means more money sloshing around, which causes more inflation in and of itself. The Chinese have gotten themselves in a bit of a bind as long as they have a blocked currency. It's not good for China to have a blocked currency, and I think this move is going to demonstrate even more.
Ultimately, they're thinking of throwing in capital controls as well to stem some of the hot money flows. Is that going to work?
Listen, whenever you have artificial controls, they work sometimes for a while, but then they always lead to unintended consequences, and it's not good for anybody. No country in the world that's had capital controls has been happy about it after a few days, months, years. It just doesn't help. It makes things worse.
Jim, it's nice to see you. It's Ross here. Is this move from China, is this just literally just a domestic issue? They want to rein in a little bit of bank lending, raise deposit rates for savers, or is it their way of saying we don't want to share more of the brunt of the dollar's devaluation?
I think what it probably is, Ross, more than anything else, is to try to do something about the real estate bubble. They do have a real estate problem in some of their urban coastal cities, and this is the way to do, they think, to do something about it. You cause the real estate developers to have higher interest rates, plus you make it more attractive for people to save their money rather than to spend their money. I think it's aimed at that. There are probably better ways, but in a broad brush, this is their attempt at the moment. They did not raise reserve requirements, at least I don't think they did, and so therefore they're not trying to cut lending, they're just trying to make it more expensive.
So 25 basis points, Jim, is, not very much at all. Is it a tension release? Is it also a political move ahead of the G20?
No, I'm sure it's partly to do with the G20. All of this is basically noise because something is going to happen at the G20, it seems, maybe finally. For the most part, it's a waste of time, energy, and money, the G20. They should just leave us all alone. But it seems to me that something is building up for the G20. I don't know what's going to come out of it. I'm sure it's not going to be good for any of us. It may be good for the 20 guys who show up, but something's going to happen.
I'm surprised, Jim, you weren't invited. But you are invited to stay around for the rest of the hour.
If I were invited,
sit right there for a second.
Why would anybody go, Nicole?
You wouldn't go if you were invited? Come on. You're invited to all the best happenings all around the globe, I'm very sure, as long as they give you chocolate and soda.
And as long as the best happenings are at CNBC.
Jim, is B of A buy? It is trading well below book. As Dick Beauvais has come out, it is also it looks like it could be a steal at this time.
Nicole, nobody knows what book value at B of A is, including B of A. Yes, I know that the balance sheet says something, but you just pointed out they may have to buy back skillions of dollars of bad paper. And if that's the case, the book value is going to decline dramatically. I have no interest in bank stocks these days. The banking industry had a gigantic bubble. Normally when a big bubble pops, it takes years for the stocks to become really attractive again. Yes, if you're good at buying them here and selling them here and selling them and buying them again here, sure, they're going to be in a trading range for 5, 6, 7 more years while they work out their problems. This is not a way for me, anyway, to make money because I'm not a good trader. I like to buy something where there's either a secular bull market or a secular bear market that I can sell short.
Right. Okay. No, I thought. No. Yeah. That's also true.
Come back.
That's also true. I thought it was Nicole. And when it comes to U.S. banks, though, my question was, we had Dick Beauvais on CNBC, and he was actually saying the pricing looks really decent, the PE looks attractive, and when you look at the cash balances and et cetera, I mean, your thoughts?
Well, let Mr. Bove buy it. I mean, that's just is not my way of doing things. I don't see much happening in the American financial community for several years other than just going maybe sideways, trading range like that, because they've got these gigantic problems that still have to be worked out. I mean, we just had a story about some of the potential problems. I don't have any idea how they're going to come out, but they don't either. And I know those balance sheets are full of rotten stuff.
Yeah, but who could be next, Jim? I mean, could we feel this ripple effect? You talked about the bajillion dollars or whatever you marked it to be, around $47 billion, which some say they're never going to actually pay that. But could we feel a ripple effect into the J.P. Morgans, into the Wells Fargos, into the SunTrusts?
Of course. I mean, Nicole, everybody was doing this. This was not just something that Countrywide and Bank of America was doing. Everybody was getting, not everybody, but, you know, most of the major banks were getting involved, and they were all having a wonderful party, slicing and dicing and taking big bonuses out of everything. But now they have to pay the price, to suffer the consequences. Everybody's going to suffer. We see that they're being bans on mortgage foreclosures. All of this stuff is going to be a huge mess for a long time to come, which is why I say, if you really want to find something in a long bull market, look elsewhere.
Yeah, but you know, the reason why a lot of people are starting to look at the banks is that B of A trades at 0.5 times book value, and ultimately the market cap is less than the cash on the books. I mean, doesn't that, I mean, at least a short-term buy? Why are you discouraged?
How do you know what the book value is? Chloe, if you know what the book value of, not what your machine says, but what the real book value of Bank of America is, if you do, you should leave TV and go into the financial community, because you're going to be very, very, very rich. You know something that nobody else knows. Forget what your machine says. Forget what the Wall Street analysts say. Nobody knows what the book value of Bank of America or any J.P. Morgan, nobody has a clue. Including me.
Jim.
Including me.
Jim,
but I know it's not what they say it is. Yes, Ross.
Jim, your thesis is therefore that we've got an impaired financial system for quite some time. We're going to continue with deleveraging. We're not going to get any credit in the system. This applies to the US. It could equally apply to Europe. We've had deflation in Japan. In a financial system in the West where we have got no credit, why on earth are we going to get any inflation? There are no multipliers in the system.
Because there are gigantic amounts of money being printed, though, Ross. You know that as well as I do. It's got to go somewhere. First of all,
we're not going to get inflation in the West, are we?
The money is winding up. Well, listen, somebody's getting that money, and the people who are getting that money are going to do something with it. Sure, the banks are going to try to repair their balance sheets, but remember, it's going somewhere. And throughout history, when you've printed a lot of money, it's led to higher prices. Plus, Ross, we have shortages developing of everything. Ross, have you tried to buy any tin recently? Have you tried to buy any sugar recently? Have you tried to buy any cocoa recently? Have you tried to buy any rubber recently? I mean, there's shortages of things developing. Prices are going through the roof. The only places prices are not going through the roof, Ross, are at the Bureau of Labor Statistics at the U.S. government and on CNBC. But the rest of us know prices are going up.
Yeah, Jim, these are things that in the last 30 years, as a share of my income, have become almost tiny. I mean, they've been going down for such a long time that actually an increment, what looks like a big jump in a year-on-year price, is a very small jump in terms of percentage of people's income in the West.
Well, that's because you make so much money. But the rest of us, you know, needless to say, we see orange prices going up, rubber prices. We see all these prices going up, Ross, and it's happening. You go into the market and try to buy something, and you will see that prices are up in the real world. Not at the BLS, not at CNBC, in the real world.
I take that point, Jim. No one's not saying they're not going up. I'm just saying that the impact of it, if a pint of milk goes from 50p to 60p, that's 10 pence. Well, 10 pence out of even the average salary isn't still that noticeable to begin with.
But that's 20%, Ross. 20% is a huge move. You know, back in 1974, the United States government imposed price controls because inflation was 4%. 4% was a tragedy, was a disaster. And normally, when you have prices starting to go up like that, 4% becomes 6%, becomes 10%. You said your pint of milk has gone up 20% already. Wait till it's 25 or 30%, and this is happening already.